Hey folks, and welcome to the Pipnotic Symposium for the 18th of December 2019. Today we're going to talk about a couple different things. Before we do anything else, I want to talk about Z-scores. Z-scores are something that I think are very interesting. If you look at this, this is premium order information, so financial institutional order book data. And I find it quite interesting because these guys are focusing on Z-scores. And what is a Z-score? Well, it's essentially the number of deviations from a mean. Okay, so a negative number means that price for the asset is very low, which is telling us here that we are 4 times 6 times standard deviation away from the mean to the negative side, which means that the value of the euro Swedish krona is very cheap. As a matter of fact, 4.6 times as cheap as like a normal expected deviation from the mean. So that's a pretty huge shift away from the mean. Okay, and now we're moving in negative territory, which means that we should be looking to buy the euro Swedish krona. And this is super interesting. So what I did was I programmed a very quick indicator that enables us to visualize this information on a price chart. If we have a look at this, it looks like this. Okay, and so 0 is the mean. Okay, so this is what we can expect price to be. We have one times deviation is going to be hovering either in the plus or the negative territory just around the 0 axis of this line here. So when price goes all the way up here, we can expect price to come back and return to the mean. Okay, and we have a low here. What can we do? We can expect it to move back higher. And this is interesting to us because it enables us to position ourselves either long or short based on this information at supply and demand. And I'm not saying I'm going to do this in the future, but this is just a fun little experiment that I wanted to take up. So if we go back to this information here, it says that the euro Swedish krona is minus 4.6 deviations from the mean. So if we go back to the chart, we can look. Let's add a line here. I'm not sure when this information was added, but let's say minus 4.6. That's here. Okay, so that's telling us, so my calculations are the same as these institutions where we have very low move away from deviation from the mean, and so we can expect price to look to move higher from here. Okay, because notice once price reaches these historical extremes, we see we had a high, we revisited the high, we moved down. We had a low, which wasn't a very big low, but when we return back to this low area, we managed to move higher from here. Okay, and we form this high, which is here. Price returned to the high, and this is where price moved away from. And so at the points where you can have massive deviations from the mean, okay, so we have one here formed by this little price point here, and price is getting pretty close to it now, as you can see. So I expect that when price returns to this area of daily demand, this combined with the fact that we'll probably be close to negative deviations from the mean, I think that maybe we could see price move higher. This would not stop me from taking a trade if it didn't line up, but it would certainly give me confidence when taking positions. Okay, it's really interesting, very fascinating study, I think. But anyway, I'll put that in the members section in the software channel, and you guys can have a look at it if you like. Okay, another thing I want to look at is these bank reports. Okay, Danske Bank, this is a bank that I used to do a lot of security work for, and these guys, they have massive, I mean, it's the biggest bank in Denmark. It's a state-owned bank, and they have a lot of very exciting economists working for them, a lot of actually really exciting people working. They have mathematicians and theoretical physicists working for them, and so they have a lot of really interesting people performing these analysis of all sorts of different things, companies and currencies and stuff like that. And because currencies are my bread and butter, this is where I'm going to focus here. And so there's a bank report that you can get a hold of, and I posted it in the members section in the general discussion channel, and you can have a look at this information. Okay, and so here, FX top trades for 2020, our guide on how to position for the coming year. I mean, this information is golden. It's a 20-page report, 19-page report, and it's talking a lot about the stuff that we need to know about fundamentally as to what are going to be the major drivers of price over the coming year. If you click on this here, it's going to take us here. Theme number 1, mind the USD cycle. And what is a cycle? Well, a cycle is just like anything, similar to deviations and reversions to the mean. You have prices, you have migratory numbers in birds, you have population growth, expansion and contraction. This stuff normally happens within cycles. Okay, there's actually several very interesting books written on cycles that I encourage you to have a look at. But an American dollar cycle is simply a comment regarding the completion of a given cycle. Okay, so let's say the strength of the American dollar has gone up for a period of time, let's say a 9-year cycle, and so if you focus on the cycle of this particular asset, well, historically after 9 years it would return and move back to the mean, okay, and kind of move lower. And so they have a pretty interesting description of what they think will happen in relation to the American dollar as a result of the cycle, the current cycle. And they have a lot of graphics and other really cool information that is quite fascinating. Here we have a small graphic that kind of shows what's going on. Here we have these different cycles, these kind of extremes here. You have another one here, and so this is just really interesting reading if you're into that kind of stuff, and I think it's quite interesting. So they have the 6 themes, and here we have number 2, pick up, carry in blue. Okay, and so this is also related to cycles, like business cycles. Just tremendous, very interesting reading. So I encourage you to have a look at that. So if you want to do that, just go to Google and search for Danske Bank reports, okay, or FX reports, and then you'll get these. And I'm going to show you what this is called. It is actually called, if I lower this down like that, you can see research.danskebank.com. Okay, and there you will land on a website, and this website will have a bunch of links like the ones that you can see here that will enable you to move into whatever section of the website you wish to. So very interesting reading and highly recommendable. Okay, Jonathan had a question that he posted in the request channel about the following. I'm going to read it up and then I'm going to go over it. Sareed, how would you handle red light, green light analysis in the decaying price cycle like consolidation? In other words, how do you decide or know when you have switched boxes? For want of a better term, your thoughts as always appreciated. Okay, so he's simply referring to the whole green box or red box thing that I like to use. So if we have a look at that here, let me go down to a different time frame. No, the daily's fine. So if we have our rectangles, so we're buying from here to here. Actually, this is a bad example because we don't know where we are. We'll go from here to here. The red box, the color, it's going to be here. So from the high to the low. I think the comment is just telling us or asking, what do you do if price is consolidating? And if price is consolidating, in other words, there are no clear swings, the best thing that you can do is you can go to a different time frame. So you go one up. And when I say better, I mean you want to go higher, because this is where the macro flows are going to be more visible. Okay, so you can see here, and yeah, we have a low, we have a high here, but this high is not complete. It hasn't really confirmed itself as being a high. And how do you know when it has done? Well, it's kind of a tough call, but I'd say if you have kind of a price, this is my little thing that I like to use. If price manages to come back, maybe give back 50% of this move, when that's a very significant swing point there. Okay, and I think once that has happened, then you have a pretty good indication that this is a major turning point. But also, you don't even have to wait that long. I mean, if price manages to turn away and we start to consume opposing demand, well, then I think it's safe to say that we have formed the high. Okay, and then you can start using the red light, green light stuff. Okay, but if you look here, I mean, you can see, I mean, in this here, I mean, price is kind of just trending higher, so it's pretty difficult to kind of choose which low would be a good one and which high would be a good one. You can't really hook it onto anything, and so you're kind of forced to go to the bigger time frames and have a look. And here you can see that we have a very difficult time kind of making any decisions. So going to the monthly time frame did not give us any clarity. This is because my broker does not have any more historical data, which is often the case with MT4. Okay, and so if we would have had something like price came down and then it went up, and then this was the same as this, and we had a higher, then we could certainly start to do our box thing and go something like this, and this would enable us to divide into the halves. We have the sell side, the sell extreme, the buy side, the buy extreme would be buying here and selling here, but you can't see that here because we don't know what's going on over here. But looking at this, it's just a very tough call. I mean, I don't know what to do in a situation like that. So what you should do in a situation like that is just change to something else that's clear. Okay, because if it's not clear, then it's difficult to make sense of it. Okay, so if we have a look at something like this, I mean, look at this one. This is not very clear, is it? But we do have clear swings. We have, if we put this on first, we go from here, wrong thing. So we go from the low to the high like that, and we start marking off these. We go from the high to the low, and we go from the low to the high. We can start to do it, and this now becomes very clear because we have these really clear points here that we can use. Okay, so the buying zone is down here, the seller zone is up here. This is pretty much where I have my orders. I'm looking to sell somewhere up here, I'm looking to buy somewhere down here. Okay, and so this is what you should be doing. But again, this has to be in sync with the greater period buy side, sell side, buy zone, sell zone. Okay, and so this is pretty important because we might think, oh, this is a great idea, but if this is on the wrong side of the chart on a greater time frame, and then we'll actually be buying at a price point where we should actually be selling. So you just have to be pretty mindful of this. And the best thing to do in a situation like that, go to the big time frames. And go to the big time frames. If you go here, it looks pretty messy. Wow, look at that. That's beautiful supply just there. I'll load the boat once it comes out. That's a beautiful area to sell just there. Okay, but in a situation like this, I mean, it's very unclear about what you can do. Price is simply consolidating here. So in a situation like that, you want to be buying at the lows. You want to be selling at the highs. Super, super simple. You don't want to overcomplicate it. You just want to find those price points that are respected historically. Test, test, test. We had a bunch of them. Now price is moving lower. And so this, on a macro level, is not a very good idea. Why? Because we're actually not anywhere near the extremes. Okay, and so the extremes will probably be down here somewhere, because where price poked into. And so I think we could probably attract some tremendous bullish order flows once we manage to move down here. And so looking at this, I mean, doesn't it become pretty clear what you should be doing? It does. We're at the top of this area. So we have, if you go like that, we're at the top of the area here. Okay, price is starting to move. Price is starting to move of this monthly supply, and so we can expect prices to drift lower from here. So we have a longer term directional bias, and this is the one we should take with us when we go down to the smaller time frames to find trades. Okay, cool. Let's have a look at another one, the euro, and do the same thing over. What do we have here? Well, here we can do it pretty clearly. We have the monthly. We have from the low to the high. And we have our green side here, which is from here to here, and the red side is down here. Like that. So where do you want to be selling? Yeah, you want to be selling up here. We've got this beautiful supply just here. This is also bearish, and we have beautiful demand down here. And so messing around longer term in the middle is not a terribly good idea. Doesn't mean they're not going to work out, but it means the major flows are going to be bearish up here, and they're going to be bullish down here. All right, you can see that we've poked into some kind of a monthly demand here. And the first, second, third test, this is where price managed to release and move higher. Okay, and we're getting close to that. We might kind of manage to wriggle up and then continue lower down to this area of monthly demand, but we don't know yet. Okay, we have no idea just yet. But we do have a pretty clear indication as to what we should be doing and where we should be doing it. Okay, selling here and buying here. Cool, well, I'm going to leave it at that and keep it nice and short today. But if you have any questions about this video, please post them in the forum or in the comment section of the video, and I'll see you in the next video. Thanks for watching.